Hello, this is Accounting 1, and today we're going to be starting on Chapter 3, which is journalizing transactions. So we're going to take it from T accounts to actually putting it in what accountants use, which is called a journal. Our objectives for this chapter: first, we're going to define all the accounting terms related to journalizing transactions. We will identify the accounting concepts and practices. We will record transactions to set up a business in a 5-column journal. We will record the transactions to buy insurance for cash and supplies on account. Record transactions that will affect the owner's equity and receiving cash on account. And finally, we will prove and rule a 5-column journal and prove cash. Terms this time, there's a few more in this chapter. Looks like there are going to be 13 of those. So that's what we're going to start with. Is for section 1 is called journals, source documents, and recording entries in a journal. So we're going to start out with a lot of definitions. The first definition you need to know is a journal. This is a form for recording transactions in chronological order. Chronological order is by date, and so the journal is the form we're going to use to record all of this. Journalizing, this is going to be the recording of the transactions in the journal. So the journal is the noun, it's the actual piece of paper, and journalizing is the verb, it's the action of recording the journal. So what is a 5-column journal? Well, if you look in your book on page 57, you'll see a picture of one, but I've kind of sketched one out. This is what a 5-column journal is going to look like. It's called a 5-column journal because over here on this side, we have 5 columns. 1, 2, 3, 4, 5. That's why it's called a 5-column journal. You can also have larger journals. We're going to start with the date, and then the account title, the document number, post reference, a general debit and credit, a sales credit, and a cash debit and credit. So some definitions for you. A special amount column, this is a journal column headed with an account title. So it's any account that we are going to use a lot. We're going to put them in its own column so that we don't have to write it out every time we use it. So we're going to put our most common ones there. So for this case, in our 5-column journal, our special columns are going to be sales credit, cash debit, and cash credit. Okay. So the reason why is because a lot of our transactions will deal with sales, and a lot of them will involve cash. By putting special columns here, we are going to save ourselves time, and we're going to save ourselves the possibility of making a mistake. So you might want to put that down. Saves time and is more accurate. Just because, not sure if I spelled that right. Anyway, just because you're not writing it out so much, that's why it's going to be more accurate. So the other one is the general amount columns. These are the journal columns not headed with an account title. So we didn't put sales and we didn't put cash. So this is our general debit and credit. So anything not going in these accounts are going to be recorded over here in the general debit and credit. So here we're going to put general debit and general credit. Okay, so we have the special account columns. These are the ones with the titles for sales and cash. And then general is going to be everything else. When you're recording in your journal, accuracy is very, very, very important. So you have to be accurate. If you're not accurate, your journal is going to be wrong, and everything you do after that point is going to be wrong. When you're recording in your journal, Every transaction has a debit and credit part. Be sure you double check to make sure you're still in balance. And again, we're going to record everything in chronological order. That means by date. So if it happened on the 1st, it goes in there first. If it happened on the 2nd, it's second. So going on down the list. You don't just jump around. Okay, some other definitions for you. Double entry accounting. This is going to be the recording of a debit and credit parts of the transaction. It's called double entry accounting because we're recording both the debit and credit parts. An entry, this is information for each transaction that is recorded in the journal. So whenever I say we're recording the transaction, we're going to make an entry. That's what that means. And finally, source document. I referred to that whenever I showed you the journal. This is the business form from which information is obtained for the journal entry. How do you know that they sold $500 on account to somebody? In your book, it has it listed as transaction 1, transaction 2. Well, in real life, you don't have that. So your source document is how you know that something happened. It's also your proof. So if you find you've made a mistake in your journal, your source document's where you're going to go back to double check. Did I record the amount wrong? Was the check really for $500 or was it for $550? So your source documents are very important. Okay, we're going to look at the source documents in your book. And there's more vocabulary words here. I did not write them out, but you can get them out of your book. So the first one is a check. This is a business form ordering a bank to pay cash from a bank account. So that may not be a definition that seems real familiar with you, even if you're familiar with a check. But it's a business form ordering a bank to pay cash from the bank account. It's basically a note saying, hey, bank, give my money to someone else. Okay, over here you're going to have your check. And business checks will typically have a check stub right here beside the check. You're going to fill out the check stub and the check at the same time. Your check stub is going to have all the information from the check along with your balance on it. Okay, the next one is a sales invoice. Okay, so your sales invoice, this is used anytime goods or services are sold. You're going to list those items, you're going to list the quantity, and you're going to list the price. So it's a form showing that there's a sale that happened. A sales invoice is used anytime that you record a sale on account. So if somebody did not pay cash, we're going to have a sales invoice to prove that that happened. And typically in real life, you're going to have the person sign the sales invoice.
Just a reminder for staff and teachers, if you are able to go get your...
Okay. Know that the concept for all of these is going to be objective evidence. Objective evidence means that you're going to have proof that something happened. You're not just making it up. Okay, so sales invoice you use anytime you have anything where you need an accounts receivable, where they're going to charge it, where they're going to buy it on account. Okay. The next one is a receipt. This is a business form giving written acknowledgement for cash received. So you know what a receipt is. You go to the store, you get a receipt. This one just happens to be written out. You paid your FBLA dues. I wrote out a receipt and gave to you. It is proof that cash has been paid to somebody. In this case, our cash has been received. So when we receive any cash from somebody, we're going to fill out a receipt. That way we know where the cash came from. The next one is a memorandum. These are kind of generic. It's a form on which a brief message is written describing a transaction. If we don't have any other source document, such as a receipt, a sales invoice, or a check, we're going to have to do a memorandum. We will also do it if we need to explain more. So on this one, we bought supplies on account from Supply Depot. We did not use our receipt because that's whenever we are receiving cash. We didn't use our sales invoices because that's whenever other people are buying on account from us. And we didn't write them a check yet. So we're going to fill out a memorandum. The next one is a calculator tape. I don't know if I can get my book up there. Okay. Here's a calculator tape. A calculator tape, basically, what happens is the company does not make out a sales invoice every time they make a cash sale. They just run it through their computer or their cash register. They don't make out a receipt. So at the end of the day, they're going to add up all of their cash sales because they don't really need to know who bought everything. Just that they sold $150 to someone, they sold $35 to someone, $110 to someone. So they're going to add all those up, and they know that they had a total of $295 in cash sales for that day. So we're only going to record that one number, not every individual cash sale. So that's also going to help save us time. It's also going to make things more accurate. We're going to label everything with the date and with a T12 or the date. So this one was August 12th, so we're going to put it T for tape because it's a calculator tape is what it's called. And then 12 for the day, the 12th. So if the 12th was on Saturday and we were not open on Sunday, the next one would be called T14. Okay? So let's get into actually seeing how to do some journalizing. There are 4 steps to journalizing. The first one, we're going to write the date. We will fill in the debit amount. 3, we will fill in the credit amount. And number 4, we're going to record the source document or where the information came from. So you should have one of these that I printed out for you for your notes. All this is a journal form. And to simplify things, I have written, instead of the stickers that we used before, I put the transactions on here so that you can keep this. This will go throughout the whole chapter, and you will be able to look through here and say, okay, what do I do if I paid cash for supplies? Well, I know right here, paid cash, well, that should be for, not from, for supplies. What if I sold services on account? Here's one where I sold services so I can see how to do that. So this is going to be very helpful, so go ahead and fill this out as we're going along. If you want to follow along in your book, we're on page 60. And this one's going to be, on August the 1st, we received cash from the owner as an investment of $5,000. It was receipt number 1. So the first thing I said we're going to do is record the date. Because this is the first, you have a journal. Every time a month starts, you start with a new journal page. So this is the first of the month. So I'm going to record August the 1st. So I put AUG and the number 1. I'm also going to put the year. Right above August, I'm going to put 2016, really tiny. Now, the only time we're going to write 2016 in August is on the very top line of our journal, the very first transaction. After that, we don't need to know 2016 in August because the rest of these are going to be for 2016 in August. So receive cash from the owner as an investment of $5,000. Step number 2 is, what is our debit amount? Well, we received cash, so we are going to have a debit to cash. Cash has a special column, and this is going to be a cash debit, so I'm going to record $5,000. When you're doing this, typically your journal will have the hundreds places shaded, and then it just has one box for the cent. Okay? And then one big box for anything over 100. So I put my 5 out here, then 000 in the blue, and then for my cents, you can either put 2 zeros or you can draw a dashed line. Okay? In college, your accounting teacher may prefer that you use the 2 zeros. Whenever I grew up, I was taught to use the dash, so that's what I do. Okay, so we got the debit amount recorded. Now we have to record the credit amount because this is double entry accounting. So what is our credit going to be? Well, we received cash from the owner as an investment. So from the owner as an investment is going to be a capital, and it's going to be a credit to capital. Well, we don't have a special column for our capital account. So I'm going to list it here. Kim Park Capital. And then because there's not a special place, it's going to go in the general credit. So I'm going to put my $5,000 in the general credit. I have a debit and a credit, and they do equal. My 4th step is I have to record the source document. That's going to go under document number. And where did this information come from? This was a receipt because we issued a receipt whenever we received the cash. So we're going to put in here R1. Receipt. The abbreviation is an R and it was receipt number 1. So R1. So that's that transaction. The next one. On August the 3rd, we paid cash for supplies. That should be for, not from. Of $275, and we wrote check number 1 for this. So the first thing's the date. So this is August the 3rd. This time I only have to put a 3 because we don't have to put the month anymore. We already know what that is. My debit, paid cash for supplies. Well, supplies is an asset, and I'm receiving supplies, so that's going to increase as a debit. So supplies is my debit. Okay, there is not a special column for supplies. So I'm going to have to list it here. Supplies. And because there's not a special column, I'm going to record it in the general debit. And it was $275. My credit. I paid cash. Okay. That is a cash credit. And that is our special column. So 275 in the cash credit column. That's what's going to make this easy, is that you're not having to list cash out every time. My source, how do I know this happened? It was because we wrote check number 1. So I'm going to put a C for check and the 1. So C1. Now, typically you won't be skipping any lines between your transactions. We just are here because I've written out what is happening. Okay, the next one. Oh, that's it for this section. So look over your terms. There are several terms that came just from section 1. There are 3 questions in Audit Your Understanding. In what order are the transactions recorded in the journal? How do we list them? Is it just whenever, or what's the order they go in? 2, why are source documents important? Why do we need to have a source document? Why do we need to list it? Who cares? And 3, list the 4 parts of a journal entry. Okay? That was these 4 steps I said we had to take. What are the 4 parts? So we will work on the work together and on your own an application problem in class. See you then.